Hey guys, I'm Dave and I'm a commercial real estate agent in the Northern Virginia area, and I'm here today to talk to you about whether or not you should invest in commercial real estate property or residential property. So you're looking at this video and you're wondering who I am and where I get my information. So as I had said before, I'm a commercial agent in the DC metro area. I've handled millions of dollars in sales and leases over the last 5 years. In addition to that, I also own multiple properties, some of them residential, some of them commercial, and I've been buying and selling homes since the 90s. I thought I'd do this video to kind of show you some of the items that I've seen over the years, because if you're not familiar with any one of these verticals and have never done it before, it's kind of a lot to take on. So there's a lot of information here. And I thought I'd share with you my likes and dislikes when it comes to commercial properties versus residential properties. Let's go ahead and talk about residential property. I kind of wanted to cover a few different ways in which you can actually buy one as an investor. The easiest way is kind of what I call house hopping. That's where you end up moving from one house to another, and you're generally there for about 2 years. The reason that you're there for 2 years is because the mortgage company has you agree to be there for 2 years. In exchange for being there for at least 2 years, they'll give you the current market interest rate, and that's generally a pretty good deal in the long run. Also, it just tends to be a little bit easier to get approval from the mortgage company. It's especially helpful if you get your place in which you currently live leased before you start trying to pursue a loan. So that's what I call kind of house hopping. The next thing is where you end up trying to buy the house without you moving into it. Well, one of the negative things about this is that you end up having a little bit harder time qualifying for the loan. You have to put sometimes over 20% down. You will pay at least 1 point higher on the loan. And it would be, it would be really great if you can go ahead and get that new potential property leased ahead of time, or at least have some interest in it. And I'm sure you're sitting there saying that's kind of crazy, but I know in my area that there is a housing shortage, and a good residential agent could probably get a lot of interested potential folks lined up even before you close. What I end up doing, even though I'm a commercial agent, is I leave the residential business to the residential agents. So what I'm saying is I actually hire a residential agent to represent me, both in leasing my properties or when I go to buy a property. And the reason why is because there's so many legal loopholes that myself as a commercial agent, I don't have to deal with. So, even though you have a real estate license, but you're not really active, I would work with a residential agent that is very active. So I just find that it helps, and it's well worth the money, especially if you let them lease it out, at least initially, when your loan might hinge on having that lease in place, relatively quickly. So the next thing that you want to consider when it comes to residential properties are the fees associated with it. Most all the fees and the maintenance you as the property owner will be responsible for when it comes to residential properties. So this includes condo fees, replacing the roof on a detached home, repairing an air conditioner that goes bad. So again, something to keep in mind. Residential properties require that, for the most part, that the owner keeps it up and functioning appropriately. The nice thing about residential property compared to commercial property is what I would deem it somewhat recession-proof. When the economy kind of takes a dip, Everyone still needs a place to live, so it's kind of nice. You might have to lower the rent a little bit to keep folks in there during kind of a down economy. I see a lot of folks walk away from potential deals, residential deals, because they just want to escalate the rent that they're getting from year to year to year. But I kind of keep pace with the economy. So if I have a good tenant in there and I know the economy is not really going great, the tenant maybe hasn't gotten a raise in a few years, I'll work some sort of deal out where instead of the standard 3% yearly escalation, I might just up it a few bucks. So keep in mind, a good tenant is really worth a lot, especially if they're taking care of the place and they're paying you on time and they communicate well with you. I'm always surprised where I end up working with potential tenants, and in the beginning they communicate really well with me, and then once they move into that house, they don't want to talk to me. They don't want to communicate, which is good as long as they're taking care of the place and as long as they're paying on time. But it's bad if you have to reach out to them and say, hey, the condo association needs to get into your place. They think that there's a leak coming from your unit. Where are you? Are you there to let them there? Or do I have to drive 1 or 2 hours, down there and let them in myself? So keep that in mind. A good tenant is really, really worth quite a bit, at least in my eyes. If you end up buying, space that's kind of in a rough area, keep this in mind that these are the type of folks that you're probably going to rent to. If it's up and coming, you might end up getting some young folks that will take great care of the place. So the type of home that you end up buying does play a big role in who ends up moving in there. If you're by a military base, you're going to end up probably having military folks move in. If you're by a college, you're going to end up having college folks move in. So this kind of plays a big role in when you're looking to buy a residential property. So I've heard some folks talk about how great and wonderful it is to be next to a college, and I've spoken to some owners that say it's a big nightmare. So it all depends. Okay, let's talk a little bit about commercial property and what it takes to actually buy one. So there's two different methods in which you can probably buy commercial property. One of the rarer ones, but I do see it, is what's called a 1031 exchange. That's where you actually take the profits and the money that you make from one property and transfer it to another property, and you don't have to pay any capital gains tax. So the nice thing about this is that it can actually be used for both commercial and or residential, as long as it's an investment property and it's about of the same value. So I see more of the 1031 exchanges in the commercial world than I do in the residential world. So beyond that, most folks have to get a loan. A lot of individuals that come to me, they think that they can go get a 30-year loan for this, just like their house, and they're not. They're wrong. So that's not right. A lot of these loans are short-term loans. They're 3, 5, maybe 10-year loans. The interest rate will always be higher. So if the current residential mortgage rate is about 4.5%, you're going to end up paying 5.5, maybe 6%, which is to be expected. It is an investment property. The banks do see it as a higher risk investment on their part. If you're assuming that these loans are going to be a lot higher per month, but they're actually not, because the loans are amortized over a 30-year period, which keeps your monthly payment low. And that's good. But the bad thing is that the loan matures. If you have a 5-year loan, at the end of 5 years, you have to reapply for the loan again, and your rate will go up. So that's if interest rates have gone up. And that's fine if you have your current property leased out and they're making payments. All you do is you show the lease to the bank, and they'll gladly go ahead and give you another loan for maybe another 5 years, 5 or 10 years. If your unit is vacant and you don't have a loan to show them, that kind of creates some issues. So I have some tenants that are trying to refinance their empty space because they haven't been able to rent it, and a lot of banks won't touch them. So their current bank doesn't necessarily just call the note. You can kind of work with these banks, and they'll end up charging you a lot more per month, and you kind of go on a month-to-month basis. So what I have found is that the national banks, when it comes to commercial loans, they're not the best to work with. They end up, most of them do not go beyond 5 years. Their rates aren't necessarily better. What I recommend doing is trying to work with a local bank that kind of knows you and maybe knows the area. They will probably give you a 10-year loan. And I would really push to try to get these 10-year loans because 5 years goes by awfully quick. And it's just much better not to have that looming over you that your note is due in 5 years. So there's many different types of commercial property, so why don't I just kind of cover a few of them. I'll cover office space. I know around here we have way too much office space, and it's actually kind of a problem to rent. A lot of these office spaces are renting as what's called a full service type lease, which means the landlord, you, would be responsible for all the electric, all the repairs, the water, the HVAC systems, and stuff along those lines. So office space does end up fluctuating. They're not all leased out as full service leased options, but I'd say 80% of what I run into, they are. So you as a landlord, you're going to be responsible for that. If you go and buy a retail spot, most all the retail spots are what we call triple net leases. So you as a landlord, you pass on all your expenses to the potential tenant, and that's really great. Unlike residential, where I said that you're responsible for the roof and the HVAC system and any sort of repairs, in the retail space, and I'm just going to go ahead and include warehouse space, the tenant is responsible for all this. You hand it over to them in good working condition, but for the term of the lease, they're going to be responsible for all the taxes, the condo fees, the insurance, and all the potential maintenance issues that involve that space. So as a landlord, we really like these leases. They just takes a big burden off of us. One of the negative things about commercial compared to residential is the actual time in which it takes to rent out spaces. So I'm in a metropolitan area, and you might think a lot of these spaces rent quickly, and yes, some of them do, but I've dealt with commercial properties that have been on the market for years. You have to be prepared to actually cover those expenses for an extended period of time. But on the bright side, most all the leases I do, they're over 3 years. It's really rare that I deal with a 1-year lease. I'd say 80% of the leases that I do, they're 5-year leases. And they all tend to have the option for renewals built in. So if the tenant is in good standing with you, they can go ahead and renew for, whatever the lease says, but for the additional terms. And the nice thing about commercial is around here, there's a standard 3% escalation involved in these leases. You don't have to try to renegotiate the lease at the end of 1 year saying, well, to keep up with inflation, I need to charge you a little bit more. It's a standard 3%, and that's, it's kind of really nice. The negative thing about commercial is that it's not really recession proof. A lot of the mom and pop stores during a kind of a down economy, they end up shutting their doors. Certain office space, especially if they can work virtually, they end up not renewing their lease or skipping out on their lease and kind of walking out the door. Mom and pop retail, kind of the same thing. Warehouse probably does a little bit better because you have certain businesses that are recession proof, like plumbers, HVAC, electrical, construction type individuals who still somewhat thrive in a down economy, and they'll need a place to call home. So the type of tenants, again, just like residential, if you're dealing with construction, warehouses, and stuff like that, most of your tenants are kind of construction type guys. Retail, kind of the same thing. If you're dealing with higher end retail folks, you're going to deal with folks with a little bit more money, and they're going to end up expecting kind of that they end up paying less rent. Office can fluctuate quite a bit. Just because you have a law firm moving in and you see these guys walking around in suits, they might end up being bad tenants. We've had a number of white collar professionals kind of walk out in the middle of the night, and it's not what you'd expect from some of these individuals. So this is kind of a quick summary of commercial and what to expect if you go in and decide to invest in it. So deciding where to go, whether or not it's commercial or residential, kind of depends upon where you are in your life, both socially and financially. If you're okay having a tenant contact you on a Friday night at 8 o'clock saying that there's no hot water in the unit, then okay, maybe residential properties are your thing. If you're okay having longer periods of potential vacancies, but almost hearing nothing from the tenants themselves, then commercial might be your thing. So it really depends. I know for myself personally, I'm doing both. So I have some residential properties, I have some commercial properties, and the one might be vacant and the other's not. So, and vice versa, it's okay. I feel well diversified. So I hope you guys enjoyed the video. To tell you a little bit about what I'm planning on doing, and I'm going to request that you do subscribe and put that little bell on. My plan is to offer potential triple net investment properties for, potential investors. And you can sit there and say, hey, Dave, I don't have enough money to buy a commercial property or a property that is currently leased and making money, and that's fine. My goal is to kind of connect potential investors together and present them with opportunities. Nationwide, these aren't my listings. I'm okay in spreading the wealth. So please subscribe and let me know if you have any questions. Thanks again, guys.